So I'm always getting asked what the best way to get started investing in real estate, especially if you're a young person that doesn't have the big down payment in cash of 20 to 25% of the purchase price like a normal investment loan requires. How do you even get started in this? Well, a good answer for you is house hacking. And my name is Shane Moynihan. I'm a real estate agent and investor based out of Keene, New Hampshire. And if you're looking to buy, sell, or invest around the area, feel free to shoot me a message. Or if you have any questions, shoot me a DM or drop a comment below. And if you want to follow me more day to day, feel free to follow my Instagram. I post there every day. But without further ado, let's get right into what house hacking is and how it's a great entry to get into real estate investing. So you might be thinking, why do I even want to learn about what house hacking is and what's it going to do to actually benefit me? Well, the average American right now is spending anywhere from about 30 to 35% of their monthly income on their housing expense. So what if you could take that down to 10%, 0% living for free, or maybe even getting paid to own a property and actually live in the property and getting paid to live there? How cool would that be? And isn't that something that actually sounds like, hey, this seems like something I want to learn about and kind of take action and put into my life so I don't have to spend that 30 to 35% on housing, because guess what? Way to look at it is that you just got a 30% raise if you're not spending that on housing. You get to actually spend it on stuff you enjoy. And at the same time, you're buying an asset that can literally pay you a monthly income for the rest of your life as long as you hold on to it. So I truly believe in practicing what you preach, and I really preach house hacking. And what house hacking is buying a property anywhere from 2 to 4 units as your primary residence, and you live in one of the units and rent out the remaining units. This will help supplement your mortgage and living expenses to help either live for cheap, live for free, or hopefully if you find a right deal and a really good deal, you can actually get paid to live in that property. So this is actually what I did when I first started myself investing in real estate. I bought my first property at 20 years old. It was a little duplex that I bought and lived in for about 3 years before I refinanced out of my FHA loan and went to buy what I'm living in now, which is another duplex, while still having that first duplex that pays me monthly and this duplex that pays me monthly. So I live pretty much for free, if not getting paid a little bit to live, because I made some good choices up front and bought a duplex instead of a single family for my first house. So since you're using this as a primary residence, the best part is you only have to put around 3.5% down. Now, depending on the loan you use, you can put anywhere from 3.5% to 5% down, usually for an owner-occupied loan. Depending if you go FHA loan or conventional loan is anywhere usually around 5 to 10%, but you can usually find them around 5%. So you're going to be able to put down a lower down payment instead of that 20 to 25% like a regular investment loan would require. And also the benefit of getting it as your primary residence is you're going to be able to get a lower interest rate than you would if you were to just go get an investment loan, because the bank sees you as a less risky borrower because it's your primary residence, so it's your house. So the way that they look at it is if it's someone that's getting a loan out to invest strictly in a property and not live in that property, they're like, if it really comes down to it, is that person going to pay their mortgage to keep themselves living in a house, or are they going to pay the mortgage on the investment property? So when that investment property is your primary residence, you're not seen as a riskier borrower than if you were just to go into an investment loan. So that's why you get to get that advantage. And then you also get an advantage from the insurance company typically, because again, it is your primary residence and not strictly an investment property. So now the goal has changed a little bit with house hacking. Kind of when I first started about 4 years ago, it was really trying to find something that could cash flow while living in the property. So what cash flow means is pretty simple. Cash flow means you're actually making additional cash and not having to put any into it. So the goal back then was to make cash while living there. It's kind of changed a little bit just because of the way the market has went up. House prices have went up dramatically. Interest rates are increasing. So the goal now is more just to strictly be able to lower your housing expenses, however that may be. Say it's getting it down to 10% of your income or living for free. Whatever it is, as long as you're lowering it from that 30 to 35%, it's a win. You're getting paid additional income because you're collecting rent, you're owning a house, and you're building equity in that house. So it's a win as long as you're basically living for cheaper than you would if you were to rent or to buy a single family house. Look at it as a win. So while you're also being able to lower your housing expenses, another great thing of starting with house hacking is you're kind of dipping your toes into the landlording game, because you're not just like jumping off an edge and going into managing 20 units and from a remote location. You're living on the property because it's your primary residence, so you're living in one of the units. You're going to be able to keep an eye on the property every night when you come home, and you're going to kind of be able to like watch your tenants, make sure that they're not out of hand or destroying your property or any of that stuff. Or if problems arise, guess what? You're on the property all the time, so you know what problems are arising. So you can't have anyone saying, oh, well, this tenant doing this to me, and like you have no proof because you don't live there. When you actually live there, you're like, I'm not seeing any of that. Or you can like kind of just figure stuff out. It's actually like kind of learning how to run your business, because this stuff is looked at as small business. You're charging money for supplying goods. You're supplying housing and charging rent. That's how it works. So being able to kind of live on the property is like you're starting up a little small business, and you're just kind of getting your feet under you. You're having your training wheels on so you can learn all the stuff and how to actually handle issues while it's more small than if you were to just jump into buying a portfolio where you have, say, 20 units and you're like, oh my God, my head's ready to explode because I don't know how to handle any of these people and there's so many problems. And the good thing about it, when you're house hacking, the most you can have is 3 additional units because you have to live in one of them and you can only buy 4. So there's only so many problems that can come up. And right now I self-manage 3 different units, and I don't have too much problems. I learned how to place tenants well, and all that has worked out pretty good for me. So if you're sitting there on the other side of the screen and you're like, oh my God, all this sounds so good. I want to lower my housing expenses because either I hate paying rent, I want to move out of my parents, or maybe you're like, I bought a single family and this seems like a mistake, I should go buy a multifamily. Well, you can always rent that single family out when you move too, so you don't have to lose any money on the sale if you recently bought it. But if you're a first-time home buyer and you're kind of wondering, well, like, how do I actually get going into this and start taking some steps to be able to buy a house hack property and start house hacking? So you're going to have to make sure you're actually going to be able to get a mortgage. So you have to take some steps there. First, you're going to want to save cash for a down payment. Again, you're not going to need that 20 to 25% down payment like you would if you were just doing a regular investment, but you're still going to need money. It's usually about 3 to, I would say anywhere from 5 to 10% of the purchase price is what you should save. You're going to have to put 3.5% down. There's going to be some closing costs to take into account for, and you're buying an investment property, so it's not bad to have some reserves in your savings account while you purchase it, just in case after you buy it, guess what, something goes and you're a landlord, you're providing housing, so you have to make sure that housing is working and actually livable. So if something goes wrong, you have to fix it. That's how it works. So having a little bit of savings doesn't hurt. Next, you're going to need 2 years of tax history to show that you're actually working, you're employable, and you have a steady source of income coming in that you can actually pay the bank back for this loan that you're going to be getting for your house. And then the last thing, the third thing that you're going to need is a good credit score. And this one is like, there's certain bottoms, I believe for FHA, it's like a 600 or a 580 is the minimum, but the lower your credit score is, the crappier rate you're going to get and the more interest you're going to have to pay. So always improve your credit score. Try getting that as high as you can. It's just like a game. The higher you get it, the better advantages you get because you have a better credit score. So try to improve your credit score, especially if it's hurting right now, or if you have none, at least take out like a secured credit card where you like give the bank $500, they give you a $500 credit card, so you can't exceed that limit, so you can't get yourself in trouble. And then after a few months, they usually give you back your money because you have earned their trust. That is, if you're actually paying your bill and you earn their trust. And then the next thing you're going to want to do is find yourself an investor-friendly real estate agent. And the reason I say this for the next thing is just so that they can kind of like take the stepping stones with you and point you in the right direction. And I really think you should find someone that is an investor in real estate. So find an agent that actually invests, because so many agents will be like, oh yeah, I work with investors, I do all this, and then you ask them a question about it, and they have no clue about what you're talking about. They're like, what's house hacking? And it's like, are you serious? Like, you said you work with investors. So make sure you're actually finding someone that practices what they preach, they have investment properties, and they know what they're actually doing in that space. And the reason I say to find the agent first is because then they're going to be able to put you in contact with a good investor-friendly lender that'll actually know what your goals are and what you're trying to accomplish. So you're going to be able to get in contact with a lender that knows that you're trying to house hack, knows the properties you're going to be looking at, and kind of what you can afford around there. And that's just going to be working as a team, because usually a real estate agent has a good go-to lender, and people think they get paid behind the scenes. They don't. It's just that they have a good go-to lender that they know is going to be able to close the transaction, and they want someone that actually responds to them, because sometimes that's hard in this business. And then while all of this is happening, while you're trying to save your money, while you're trying to work on your credit score, and you're doing this and that, the biggest thing that I advocate that you do is educate yourself on this. Educate yourself on investing. Learn from others who have done it before you. Buy books, watch YouTube videos, listen to podcasts. Take in as much information as you can so you can be prepared when you actually become a landlord. Because I think it is like a huge disservice to buy a multifamily while you have no clue what you're doing, and then you're putting the tenants through hell because you didn't prepare yourself. So you should actually be investing in yourself just as much as you're investing in your future with buying a rental property. Invest in yourself and learn about this stuff so that you can know how to manage the units. You can know how to place tenants, how to screen tenants, what to do to write up a lease, how much security deposit you can collect, what to do about pets. All this stuff you have to learn because you're supplying housing and you're now becoming a landlord. So it's something you have to do. And down in the description below, I actually included a rental calculator that I use that will basically walk you through how to break down a rental property to see if it makes sense, if you should buy it or not, because you want to buy something that's going to make sense in cash flow and actually make sense while you live there. And you want to run the numbers for when you move out so it can cash flow when you don't live there. And then I also included a free ebook that I wrote about house hacking, how I started, my experiences, and what I kind of suggest people do to learn more about it. So if that all sounds good, that you're trying to save some money and not have to pay 30% of your income towards housing, if you're trying to invest in your future by buying a house and buying an investment property that's going to pay you the rest of your life, have a lower barrier to entry than you would if you were to just go a regular investment loan, then house hacking is probably a great avenue for you to explore and start learning more about. It's probably something that's going to be that like first stepping stone towards investing. And then once you're like living for a couple $100 and you're living for 5-10%, if not free, or 5-10% of your income, it becomes almost an addiction that's like, oh my gosh, this is possible. I supply people with housing and good quality living, and they're gonna help pay my mortgage, and I start to kind of grow your portfolio from there and just grow bigger and bigger and bigger. And you can repeat this step. You usually have to refi out of your loan, but you can repeat this and go do it again. Live in another multifamily, get it with a low down payment, and just keep repeating this to build your generational wealth and have your monthly income keep going up and up and up, because it's like a game and you might as well when you can. So again, my name is Shane Moynihan. I'm a real estate agent and investor. As you can tell, I'm pretty passionate about investing. So if you have any questions, feel free to shoot me any type of message. I'll find a way to answer it. If you're looking to buy, sell, or invest around Keene, feel free to reach out to me. And if you want to stay up to date on me daily, feel free to shoot me a follow over on Instagram. But until next week.